So when you're talking to clients, are they concerned at all about inflation or the fact that these Fed rate cuts aren't coming this year? I think a lot of people assume that we would see one, maybe two cuts. That seems a lot more fuzzy now.
Yeah, I think especially as you mentioned after yesterday's CPI report, really though, Frank, the market, I believe, can continue to perform well in the face of higher rates. Now the expectation is I think 95% probability we won't see a rate cut and only a 20% probability that we'll see a rate cut in May. So you've seen some of the big boys like Bank of America remove all rate cuts for 2025. So long as you have earnings growth, the market can move higher, even in the face of higher interest rates.
All right, so you're really focused on earnings growth. It sounds like you think that's going to be the dominant force in the market, not the Fed as we've seen before. I have to ask you, when we see the idea of tariffs, reciprocal tariffs on just about every nation that tariffs the U.S., also the tariffs on China right now, and the possibility of tariffs coming back to Mexico and Canada. We just don't know how that's going to resolve itself. Does that concern you about the earnings picture going forward?
Well, tariffs certainly is the number one headline and what we're talking about every day in the market. So Goldman had a very interesting report that showed if the effective tariff rate is 5%, and it's very easy to get to 5% if you look at the various proposals under the Trump administration, that could hit that could increase inflation by 3 to 5 basis points and hit earnings 1 to 2%. So it could be meaningful. At the present time, the market is really shrugging that off. Last week, we had the fastest trade war in history with Mexico and Canada quickly making concessions. So at the present time, the market really doesn't believe that the tariffs will move forward as proposed and believe it's more of a negotiating tactic, but it's something we're watching closely.
Okay, well, with that perspective in mind, where are you advising clients to put their money? We've seen some weakness in tech and the Mag 7 recently. Mega cap tech, that used to be a safety play. It seems like that narrative's changed. When you're talking to clients that at least want to put new money to work, what area are you telling them to put it to work at?
Yeah, it's really interesting what's happening within tech. You've had somewhat of a churning within that sector. And if you look at the earnings growth gap between the Magnificent Seven and the other 493 names in the market continues to narrow. So at Q4 2023, that earnings growth gap was 66%. Fast forward a year later, it was 19%. So we think that gap continues to narrow, but we are in a secular bull market. So for this secular bull market to continue, tech needs to continue to be leadership. So I do think that there's some opportunities there. Although with AI and the AI evolution, we've moved from a picks and shovels infrastructure story in 2024 to more of a software story in 2025. And with that broadening out, I do think there's other areas in the market to look at that all ships should rise. Financial should also do very well.